All right, this is Kerry Artak with Artak Advisory, and this is this week's, that is the week of Monday, January 18th, this week's video supplement for the AgriTalk video show that I'm a regular on every Monday afternoon. In this show, I cover three markets, March corn, March soybeans, and March soybean meal. Let's jump into corn. This is just kind of an update of what I've been saying on the show now for the last month or so, following the buy signal in late December above this 465.5 long-term channel bottom. The very same week, we also posted a buy signal by closing above a descending 1/3 speed line, this week at 453 3/4. So this, rough 12-cent range of support, well below the market presently, is, if tested over the next, month or two, and I don't anticipate that, but if so, it can absorb selling into summer trade, and above which a long-term buy signal remains in effect, ultimately expecting this 623 even to 651 even region, which is narrowing ever so gradually into the 623 even to 638 region roughly as we continue into June, July. So this is our ultimate objective on the way up. I've been mentioning in my daily newsletter analysis for the corn market that we've got a little bit of resistance at 536 1/4. That's an old 2012 spike low that played out before the high was made that year. And so we've been testing that actually. We got a 541.5 high from last week. We have several days of the actual 536 1/4 holding. So this is an area, it's not significant, and if settled above, we've yet to have a daily settlement above it. Even a daily settlement above 536 1/4 should set off follow-through buying and make this rally as vertical as it has been over the last 3 to 5 weeks. 579 even, then likely within 2 to 3 weeks of that. 579 even is a 50% pullback from the 2012 high against the 2020 low. And it is one, because it's roughly consistent with some of these lows here, I'm going back into 2012, this old consolidative region, because it's roughly consistent with that as well, I think it is one that should be respected for its ability to contain monthly buying pressures if or when tested. And so let's say that we test 579 even into late January, early February. It can absorb buying through February into March. From here, we could certainly fall back to 536 1/4 within a week or two. But just keep in mind, the ultimate objective remains 623 even to 651 even. 623 even is nothing more than a full extension of this channel structure, and I've been using them for years. They're not necessarily areas you want to sell aggressively into as a ceiling of resistance, but it is a met objective. 623 even is a met objective following the settlement a few weeks ago above this 465.5 channel top. 623 even to 651 even, if tested over the coming months, and it is assumed that we will, can absorb buying through 2021. Let's move on to soybeans. Soybeans, we've had a series of buy signals since really late August, and then again in early November, and then again last week by closing above this 1371 1/4 speed line by more than a 1% margin. We're now in yet another 2 to 3 month buy signal that should yield 1660 1/4 over that time horizon. So this all remains true above 1371 1/4. Our next meaningful resistance at 1536 3/4 is in reach over the next few weeks, and it can absorb monthly buying pressures if or when tested. But just know that closing above 1536 3/4 is ultimately expected, and if over the next few weeks, then we're just another 2 to 3 weeks from testing this target at 1660 1/4, which can absorb buying pressures for the broader soybean complex through 2021. And once again, it remains a 2 to 3 month target above 1371 1/4. Now, if we close the week Friday back below 1371 1/4, we have ourselves a failed longer term buy signal, and that should then yield 1137.5 over the following month or two. We've got a vertical move here, and when these are in other words, when the high has been placed, and determining that is as much of an art as it is a science, but for me it would be a settlement this week Friday below 1371 1/4. under that situation, this market can fall back at the same angle, at the same rate of descent at which it rallied up to that point. So in other words, it becomes church steeple-like. We rally high, we rally back, or we fall back. I don't think 927.5 is in the cards this year. I do think, though, if we close below 1371.25 this week, 1137.5 in reach by the end of March, where we can actually bottom out not only in the summer trade, but quite possibly through the balance of the year. And finally, soybean meal March contract. I have this as a target now for the last month or so, this 457.1 long-term channel top. We actually closed above it last week. So now we are in the midst of a long-term buy signal as well. We've had a series of what I call mid-term buy signals in soybean meal since the low last August, or last summer, I should say. But this one is significant because I think it paints a longer-term picture. I have 541.8, which is the 2012 high. That is a realistic 2 to 3 month target now. Given the rate of this rally, we could get there within 3 to 5 weeks perhaps. And this is an area where we could certainly double top on a seasonal basis, possibly annual basis. But, I'm not one who just, I'm not a big fan of the double top, retesting an old high. Yeah, it works sometimes, but it's really a 50-50 proposition. I think that having settled above this formation last week, this market has the room now to rally into the 610s over the coming, the question here is, I'm going to say over the next 6 to 8 months, year at the very most. This rally, this angle can continue on upward to 617 even. And this is, we'll call that a summer low. This is basically a 6-month rally here. So 6 months out from here puts us into summer. 617 even could certainly be a summer 2021 high where we could top out through 2021, possibly through the decade itself. And I think you could stair step this. So holding above 457.1, I think 617 even is realistic, but you could take it in 2 steps. The first would be 541.8 is our realistic target. Here we could top out for a month, maybe several months. But honestly, I think a week, 2 or 3, and then we could easily settle above 541.8 and 617 even. Here we come. Now, downside, closing the week back below 457.1 would be considered a failed long-term buy signal. And I think then 413.1 becomes a realistic 2 to 3 week target. And by the end of March, end of February perhaps, but end of March, 395.1. This structure well suited, if tested, say by the end of March, able to absorb selling through spring and into summer trade, and also a meaningful downside continuation point over that same time frame. But that's really all that needs to be said for this week's. Oh, by the way, if you're still listening, please go to my website, rtechadvisory.com. Go to the AgriTalk video page. Please fill out that free trial form. You'll get 2 free weeks. If you haven't had a free trial in 6 months or more, I give you another one, no questions asked. You'll get a follow-up call. I'll even offer a consultation for a brief phone consultation. We could talk about your trading, hedging needs, so forth and so on. I should have mentioned that at the top. But anyway, that's all I'm going to say for this week's AgriTalk video supplement. So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You've nothing to lose and much to gain.